Soft Currency Economics by Warren Mosler. How Fed funds targeting fits into overall monetary policy. The Federal Reserve is presumed to conduct monetary policy with the ultimate goal of a low inflation and a monetary and financial environment conducive to real economic growth. The Fed attempts to manage money and interest rates to achieve its goals. It selects one or more intermediate targets because it believes they have significant effects on the money supply and the price level. Whatever the intermediate targets of monetary policy may be, the Fed's primary instrument for implementing policy is the federal funds rate. The Fed funds rate is influenced by open market operations. It is maintained or adjusted in order to guide the intermediate target variable. If the Fed is using a quantity rule, that is, trying to determine the quantity of money, the intermediate target is a monetary aggregate such as M1 or M2. For instance, if M2 grows faster than its target rate, the Fed may raise the Fed funds rate in effort to slow the growth rate of M2. If M2 grows too slowly, the Fed may lower the Fed funds rate. If the Fed chooses to use the value of money as its intermediate target, then the Fed funds target will be set based on a price level indicator such as the price of gold or the spot commodities index. Under a price rule, the price of gold, for example, is targeted within a narrow band. The Fed raises the Fed funds rate when the price exceeds its upper limit and lowers the rate when the price falls below its lower limit in hopes that a change in the Fed funds rate returns the price of gold into the target range. Open market operations offset changes in reserves caused by the various factors which affect the monetary base, such as changes in treasury deposits with the Fed, float, changes in currency holdings, or changes in private borrowing. Open market operations act as buffers around the target Fed funds rate. The target Fed funds rate may go unchanged for months. In 1993, the target rate was held at 3% without a single change. In other years, the rate was changed several times.